Hello, everybody, and welcome to VRIC Media, your most trusted voice in metals and mining. My name is Jesse Day. Today is November 18th, 2025, and I have the pleasure of hosting a fantastic panel, which we have lined up for you today with Jeff Clark, founder and publisher of thegoldadvisor.com and author of Pay Dirt, as well as Chen Lin, editor and publisher of What is Chen Buying? What is Chen Selling? Available at chenpicks.com. We're going to dive into the gold and silver sector today, gentlemen. It is great to have you on the show.
It's great to be here, Jesse. Thanks for having me. We got a lot to talk about.
Yeah, it's great. Great day to have this host. Have this meeting. So
Yeah, absolutely agree with you. Let's kick things off with the silver market and our new reality of $50 silver looking like the foundation of prices and the potential for higher prices up ahead. What do you think drove silver's tremendous run? And are we closer to the beginning or the end of this bull cycle in your view? Jeff, I'll start with you.
Well, take your pick in terms of catalysts. The same for gold, but when gold goes, silver's going to go as well. Um, I think a lot of those same catalysts have not fully played out yet, and of course, there's more to come. Uh, in my opinion, I think silver's got a ways to go, but it's great to see $50 silver as our base now. Not that it won't dip below that occasionally, but that seems to be more the floor now as opposed to the ceiling. And now that we've broken through, I think it's a matter of, what is the next catalyst? Take your pick. Is it door number one, two, or three? In terms of things that could really ignite this and push it a lot higher. So, I think silver's on its way and it's got a long way to go. What's important to me, Jesse, is that it's a confirmed bull market. GDXJ is outperforming GDX. GDX is outperforming gold, and now silver is outperforming gold. It's up 71% as we talk today to gold's 52% roughly. So, all the ingredients are in there, and that implies what our strategy is, and that is you've got to buy the dips. It's an old phrase. It's been around a long time, but now that we're in a confirmed bull market, buying the dips is exactly what our strategy is.
Great summary. And Chen, what are your current thoughts on the silver market, our run to over $50 and where you see it headed moving forward?
yeah, if we talk about $50 silver 3 years ago, people were thinking we're crazy, but we are
Yeah.
here
Yeah.
at $50. And there we hit $50. This is third time. There's no triple top, and it's going higher. If you want me to guess what would be the next big catalyst for silver, I would say because China already put silver at the export control list a few weeks ago, so it's starting 2026. So I would say maybe a week before that happened, Trump suddenly realized China is putting silver on the export control list, and then he starts saying, "Oh, we're going to tariff you 1,000%." Then people realize, and then we have a huge run. So if that would be the incident that you see that could happen. But besides that, silver is we're fifth year, 5 years, okay, into the deficit, according to Silver Institute. Actually, I talk to the Silver Institute guys quite often. The Silver Institute guy, the analyst, actually, he's based in Taiwan. I talked to him for years. I told him, why don't you buy more silver? Buy some silver. So I think the deficit still here after 5 years, even at $50 silver is something. Which means the silver at $50 still couldn't push the balance of supply and demand. So that means we are going higher. I'm quite excited about that.
And yeah, you mentioned their export controls. We've also seen silver now officially added to the critical mineral list in the United States. We have seen Russia starting to stockpile it as a strategic asset. In terms of it being declared a critical mineral, how much of an impact could this have on the silver market in your view, Jeff?
Well, I think all of us on this video, everybody watching, knew that silver was already a critical mineral. It just
Yeah.
took the U.S. a while to get to that point and declare it as such. But for me, industrial demand is important. I don't know if it's the big driver of the price. In my opinion, it's more of a support of the price. So I get excited when I see all the new uses, silver's being used in industrial and how it's growing and it's going to continue to grow. I don't think that's what's going to drive silver a lot higher. I think it's going to be quite simply, it's going to be investment demand. That's the big outlier. Industrial demand goes like this, jewelry demand goes like this, silverware demand goes like this, investment demand goes like this. And so when it spikes, that's when I think we have at least historically seen much higher silver prices. So for industrial demand and it being a critical mineral, I think it's important. It'll support the price. Watch for investment demand to really be the big outlier and the big catalyst for the next big move higher.
And Chen, what are your thoughts on silver being declared a critical mineral and any other light you could shed onto these Chinese export controls of silver? And just from your view, how the Chinese government is looking at silver as a strategic asset on their end? Would love to hear your perspective there.
Yeah, very interestingly, in the same week of United States declare silver as critical metal, China also published silver as a critical metal. And China put silver
Mhm.
next to tungsten and antimony. Tungsten and antimony are very critical for the United States and actually tightly controlled by China. I read some articles that did some research on that. China actually control more than 50% of silver production. Because silver are byproduct of copper, byproduct of zinc and lead, most of smelters are based in China. That's how they control most of the silver. And recently, the silver inventory in China was cut in half, actually more than half, because of the silver squeeze to London. If you remember, it was first started in the United States. The rumor that Trump may declare silver tariff, right? The silver fly in from London
Yeah.
to the United States, to Chicago. Then we have a silver shortage in London. And then there's silver squeeze, and then everywhere they're shipping silver, they're flying back silver back to London, and also from China. I'm not sure Chinese government appreciate that. Half of the silver are gone to London. So at minimum, I think they want to prevent anything like that to happen. So if there's some shortage in silver somewhere else, it's your problem. It's not my problem. Silver stays in the country. So the detail of the implementation, we still don't know. Okay, it just declare as a strategic metal for China and declare all these export you have to register with the government starting 2026. So we do not know any details. It's only a few, maybe 6 weeks from now. So we will learn that as we're going. But I think minimum, Chinese government want to avoid this kind of problem that half of the silver are gone to London or Chicago in the future. Who knows?
Yeah, that makes a lot of sense. I want to turn to the gold market now. Obviously, much like silver, it's had a great run this year to new all-time highs. I believe now we're sitting at around $4,000 an ounce. I'll ask the same question here. What are the main catalysts that got us here? How much higher do you think we could go, Jeff?
Well, the catalysts that for silver are the same ones for gold, pretty much. Again, take your pick as to what the catalyst is going to be going forward. A lot of the things that have driven gold and silver higher have not resolved. So it's just a matter of what crisis is next, and it means we need to keep holding on to our gold and silver, obviously. So, but like silver, I think for gold, the floor now appears to be 4,000. Again, not that it wouldn't dip below that, but that seems to be our floor to push higher. In terms of timing, who knows? I stopped trying to guess these things a long time ago. But it wouldn't be surprising to me to see it kind of trade sideways through the rest of the year, and then once January kicks in, everybody's back at their desk, and January is typically a good month for gold and silver, so I would expect to see it the next move higher. In terms of how high this could go, I mean, who knows? Jesse, I'm in the camp that I don't really want to see $10,000 gold and $200 silver. $208 silver, by the way, is what it would be inflation adjusted based on the CPI, as many people call it. But uh, that would imply quite a big spike. And yet, silver, if I could just mention for a second, went up over 1,100% from its 76 low to its 1980 high, and we haven't even doubled. So, there's a lot of potential there, and the same thing for gold. But I worry about what kind of world we would live in $10,000 gold and triple digit silver. Silver is spiky, so it could run a lot more, and it will outperform gold, as I think, as the audience knows, before the bull market is over. I would just rather see it orderly and not based on, the world ending and gold all of a sudden is $20,000 or something like that. And besides, I'm focused more on the stocks anyway, so.
We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
Chen, your thoughts on gold's run and where we sit right now at $4,000, and perhaps if I could bring your perspective as somebody who has a pulse on what's going on in China. We're seeing a lot of reports on social media. We're seeing a lot of video of these gold markets being filled up, a lot of retail buying of gold in China. And in fact, the Chinese government trying to incentivize and encourage their citizens to stack gold. How accurate are those videos and those reports, and just your overall thoughts on the gold market where we are today?
Yeah, they are mostly true. Okay, they're also actually on the other side. When this gold surge, there are also people lining up to sell gold as well. So there's a both side of the story. But I think in general, if you look at China in general, right, as a citizen, as an investor, China is a very high saving country. You know that you've been to China. So the every whole house has a lot of savings. And then the government has been cutting interest rate, right? China has almost zero interest rate. You put in a bank, you get maybe 1% return. So, and then stock market, just sometimes doing well, sometimes not doing well. We know that. And the housing market is just crashing, completely crashing. There is no end in sight from when the housing will bottom, but someone may argue with me, say it's coming, it's close to bottom. So from the Chinese citizen point of view, we're going to put the money. So one of the easy way, and that has been so far successful way, is put into gold. So there's a lot of gold buying, and then people like to buy physical gold. So actually the physical gold, the demand has been going through the roof in China. As you can see, there's a very telling graph. Maybe I can send you later. Look at the gold stock in Shanghai. It's going parabolic. It's still going up. So the strong inflow of gold to China and actually absorb a lot of selling actually from the West. Recently, there's a lot of selling. You know that there's some famous hedge fund was selling. They say 4,000, that's too high. So my point of view, we probably get into the second half of the bull market. Okay, so that's just my guess, a sense of where we are, but not the end, but we are at the second half. There's a characteristic of the gold market. Okay, we've seen that for the past decade. Usually in the second half, silver will outperform gold. Usually in the second half, the silver will spike, which we were talking about silver. And I strongly believe silver probably will spike in the next 6 to 12 months. However, when silver really spike, usually is we getting to late in the in the bull market, unfortunately. So from my personal feeling, I don't want to see silver spike. I want to delay that as long as possible, but sometimes the inevitable will happen. So when the silver spike, sometimes you need to write down the note that could be getting closer to the end of the bull market. So I think we are still far to go. We are probably in the second half of the bull market.
Great observations from both of you. I want to talk about the consolidation that both gold and silver were in prior to these breakouts and whether you could potentially see that repeating itself. It was approximately the beginning of June to the end of August, early September that both gold and silver essentially were consolidating sideways before breaking out. Do you think we're headed back to that sort of more long, perhaps grinding? It's not that long really in the grand scheme of things, but it certainly shakes certain investors out of the market and takes a little bit of the shine off of the bull market. Do you think we could be headed for another consolidation, perhaps several months, perhaps longer, before the next leg up in this bull market, Jeff?
Yeah, we're in a consolidation now. I think that's pretty clear. We're going sideways. It's volatile, but we're going sideways. So the question is just a matter of when does the next breakout occur? I don't think it's an if question. I think it's a when question. So I think we're, headed for that maybe in the new year, as I mentioned. So I see a lot of good times ahead for gold. I agree with Chen. We're probably at halftime because we're in a consolidation right now. Um, the good thing about consolidations, and especially the volatility that we have right now, it makes it easier to buy the dip, so to speak. So when you see big down swarms, that's an opportunity for me, and I have been aggressively buying here recently. So I think there's a lot more ahead for gold.
And what do you think, Chen? Because obviously, if we look at a chart, gold and silver have both gone fairly parabolic recently, and now, as Jeff mentioned, starting to consolidate. Do you think we're going to be waiting for a while here, and perhaps this is a time to take advantage and buy the dips, as Jeff has been saying, before we see another breakout?
Well, I'm slightly more optimistic than Jeff. I look at the calendar, November 25th. That's about a week from today. Why is that? It's a settlement of the December future. Usually, the dealers, they try to keep the price stable before the end of the year. So I think there will be a lot of force trying to keep gold and silver where we are, not to break out, far from where we are until November 25th. And after that is anybody's guess. Traditionally, I found that December, January tend to be good months for gold and silver. Actually, it can go up very quietly because it's a really holiday season. Not a lot of people there trading, and then gold just continue to go up. Actually, I have a theory. Gold, actually, I studied that. It turned out to be true. Usually, physical gold peak around Chinese New Year because that's the maximum of the physical demand. Next Chinese New Year it always change from time to time, but next is February, mid-February. So I see potentially we could have another run, December and January. Finger crossed.
Yeah. Hey, Jesse, I want Chen to be right. The next up leg starts in a week. I'd like to see that. So, we had a mini mania, like you pointed out, Jesse, in October, and that was a mini one, though. There's going to be a bigger one ahead. The one in, 79.80, that lasted roughly 13 months or so. But that was the end, as Chen pointed out. The mania is when you're getting near the end. And historically, manias last about a year. So when you see that, you better be in or get in pretty quickly because we're going to be closer to the end at that point than the beginning.
Yeah,
Well, let's discuss
that's the thing.
yeah.
Maniac, I'm a little bit worried about. I hope we can delay that as long as we can. But you
Yeah.
just look back about last week, silver went from 48 to 54 in 2 days, 2 or 3 days. So you can see how fast it moved. I can see it moving even faster like that. So you better be prepared.
Yeah, exactly.
Very well said. I want to discuss the gold and silver mining sector. Let's start with silver. We have very few pure play silver producers. So I'm wondering how both of you approach the sector. Do you stick with pure silver producers? Do you look for companies producing both silver and gold, or perhaps some of the other byproduct metals that traditionally come along with silver? And what are your overall thoughts on the potential opportunity being presented by the silver mining sector at present? This time, Chen, I'll start with you.
Yeah, I have a very big portfolio around my family, assets. So I own from silver future market, a silver partner because it's tax advantage for U.S. investor if you have the future. And also, I am a producer, silver producer. Unfortunately, there's not a lot of silver producer out there, especially pure silver producer, almost none. So, I mean, if you can say most of closest, it probably First Majestic, 60% from silver. There's a lot of silver company. They say themselves silver, but they're not really silver. They mostly are from gold and from other byproduct. But that's life. So from an investment point of view, so you need to go down from all the silver mining to junior, all the way to junior, right? Producers, mid-tier to juniors. And then you pay special attention to pure, not pure, almost pure, more than 50% silver mines project. Because a lot of the companies, they will be looking for them to buy because they want to increase their silver exposure. Those will be a good target. I already went through Silvercrest, which is my number one position, got taken over by Core. Now Core is buying another company for New Gold, but I expect them to buy another silver company immediately after closing New Gold because their silver down to 20%. That's not acceptable, right? So that's the thing I'm looking at. There's a lot of opportunity. I'm sure Jeff have a lot of ideas too.
Um, well, it's true, as you pointed out, Jesse, that there are very few pure play silver producers, meaning greater than 50% of their revenue is coming from silver. I mean, you could count them almost in one hand how many have that. Even if silver's in their name, it doesn't necessarily mean they're a pure play. But those that are identified as pure plays, uh, I think will get special attention as the bull market matures, and especially if it go into a mania. Somebody's going to write a report on that, and it's going to ignite those stocks. So I think that's coming. But for me, I don't get too excited about silver producers. I don't follow them too much. Peter Kraut with us follows him. He has an entire letter dedicated just to silver. So I let him worry about those. What I'm focused on is the company itself. So we have the wind at our back with gold, with silver, uranium, copper, maybe some other metals. So within those metals, I'm looking at the company itself and I'm trying to identify who has the most compelling investment case going forward and where are my dollars best allocated to companies within those metals. If I pick the right companies or pick more right companies than wrong companies, then I think it's going to be fun days ahead. What we saw in October for the mining stocks, in my opinion, my humble opinion, is just a taste of what's to come ahead at some point. Hopefully it's delayed, like Chen says, but either way, I want to make sure I'm in the right companies at a good price um, before this next up leg really kicks in.
And let's switch to the gold mining sector now. The gold miners, particularly the producers, are printing cash at these prices. And I've spoken to many analysts who believe that even the biggest players, Barrick, Newmont, Agnico Eagle, are undervalued at these prices. What is your current assessment of the gold mining sector, and where do you think the most value lies when it comes to gold miners, Chen?
Yes, I own a lot of gold miner, my producers, and my number one pick is Equinox, and so far they're doing very well, and they probably will do complete very 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 well into 2026 as well. My strategy is very simple. I want to buy the new gold mine. Same thing for silver as well. That's why I pick Silvercrest. The new mine after being built, that's most vulnerable being taken over. So same thing for Equinox and to answer your question on Barrick Newmont, there is a rumor actually Barrick going to be split into pieces, but the Newmont may buy a piece of them, especially in North America. I think a lot of consolidation are coming. I agree with you. Most of the mining company are undervalued, and I own tons of those producers. But I also afraid of a thing, because we went through some boom and bust. One experience I had from 2011 to 2012, where I sold most of my gold miner. One of the reasons was every gold mining company, they increase their gold assumption. When you increase your gold assumption, you will mine the lower grade gold. And then your cash flow will go down, like dropping like a rock. And with all the other inflation factors, steel, oil going up. So that should make it very unfavorable, in my opinion, that time. That's why I exit most of my gold miner. I hope I won't have to do it this time as well, because if you see the gold mining company, they they start mining lower grade, their all-in sustainable costs start to skyrocketing. Even gold price go up, their margin is not increasing but decreasing. But imagine what if gold price goes down, right? So that's my biggest concern. But so far, so good. All these gold companies are very disciplined. They're still mining, generating a lot of tons of free cash flow. The free cash flow is what we haven't seen for a while. So I hope this continues.
And Jeff, your thoughts?
You're right. The producers are literally printing cash. We're approaching 2 years now where the earnings and free cash flow of the producers has gone higher every quarter. And I don't see any reason why that's not going to continue. Uh, because they're printing so much cash, that frees them up to do a lot of other things, whether it be M&A, pay dividends, buy other assets, advance projects that maybe were low grade. So I think the producers really are in a very prime spot. In fact, uh, I forget the exact figure, but the margin right now for producers as a whole in the gold industry is the highest it's ever been in history. And you think, wow, inflation's gone up, costs have certainly gone up, feasibility studies have been wrecked, they had to be redone because of inflation. And yet the gold price has risen faster than the rate of inflation for the miners. Therefore, their margins are actually going up in a rising inflationary environment. That's pretty powerful. And I think it's only a matter of time before the Main Street and Wall Street see the green on the screen with the producers and come join us. I don't think that happens until the general stock market goes soft, but we'll see. For me, as I mentioned, I'm really more focused on the juniors and the potential they offer. I'd rather be the acquiree than the acquirer. You get the more bang for your buck there. So I'm really focused on what company out there right now is offering compelling value, has strong fundamentals, and is poised to add leverage to a rising gold price environment. That's where I'm focused. And as I mentioned, I've been aggressively investing when, this volatility makes it easier. I don't chase them. I look for days when things are falling, but that's where my focus is right now. And I'm pretty excited about what's still ahead for us.
Well, let's end by touching. Oh, go ahead, Chen.
Yeah, I couldn't agree more with Jeff. I mean, a lot of juniors on my space I'm watching, some are cut in half. Just recent a little bit drop in gold and silver price because sentiment changed so fast. So we have an opportunity actually using this pullback to accumulate the juniors. There's a lot of juniors down a lot. Even producers, some are down like 30%. Even gold and silver only down 10. So there are a lot of opportunities.
Well, let's end on discussing some other metals. I'll start with you, Jeff. I know that you're interested as well in the uranium and copper space, as you mentioned. Maybe just some insights, any insights you can share into the trajectory of those two metals and which areas of the mining sector you're looking at when it comes to uranium and copper.
Uranium and copper both have similar fundamentals. They have supply demand issues, they have political support, they have environmental support. There's a lot of very strong tailwinds behind those two metals. So, as with gold and silver, I'm really focused on companies that can benefit from that, buying them on the dips. But again, I'm going to be a little further down the ladder. Maybe some development stories that are getting near to making a construction decision. I like that time frame there. But mostly it's going to be juniors and those that can benefit that, whether it be making a discovery, growing a resource, not by 10 or 20%, but doubling or tripling the resource, those that are in the direct tailwind of, Canadian and US regulatory hurdles that have been removed. So I really like companies in that regard that are in those areas. And the other one I'll mention real quick is I put this in my presentation, and I'll mention this again at VRIC in January, and that is new names. The third category that is really benefiting from all of this is new names, companies that are new to investors. Now you still have to pick good new names, not just any new name, right? But investors tend to get excited about new names and not the ones that have been hanging around for 10 or 20 years and haven't gone anywhere. So I'm also got my ears perked up and my radar on for looking at for new names there as well. And I think Chen and I have both hit some good new ones.
Great. And Chen, what are you watching when it comes to other metals? Critical minerals obviously has become a big topic now, with this whole trade war between the US and China. You mentioned tungsten, you mentioned antimony. What metals outside of the gold and silver space are you most focused on right now?
Well, one area I also like copper a lot. Okay, copper because with all this AI boom, you look at you listen to all the conference calls of the company, they are bidding up the electricity price going up like this, and we need a lot of power line, a lot of generator, even the transformer become a big backlog. You want to build AI center transformer can take 2 to 3 years. Those are not acceptable, right? So we need a lot of copper. That's one of my favorite. Also very much into critical metals. And we know, as if right now, United States and China still haven't signed the critical mineral agreement. There's no agreement. Okay, they're still talking about maybe get it done before Thanksgiving. We'll see. So the critical mineral is something United States has to work on, regardless. Actually, there is agreement, not agreement. But right now, the market seems like critical mineral trade is over. Everybody believe what Trump or other people said. Oh, we have a 1 year supply of critical mineral. No, even if we have agreement, okay, in the next week or two, hopefully, they still only buy some time, right? You have to build critical mineral. So that's why I'm very excited about the investment in critical mineral, especially the price are down. A lot of those are down below the recent financing price. So I'm quite excited about that.
Great. Well, Jeff, tell us about the goldadvisor.com and pay dirt.
Well, I wrote the pay dirt when I lost my excuse of having no time, during COVID. I was forced to sit down and start writing it. So it took 2 or 3 years, multiple drafts, but I'm proud of it. We tried to make it entertaining and fun to read. The price is lower now, so you can get it fairly inexpensively on our website or on Amazon. But it is the basis of what I use personally to evaluate a stock for myself. And if it's something I'm going to buy, it's going to go in the newsletters, and you can get a gold and silver mining newsletter that evaluates stocks and tracks them. It gives recommendations and our personal disclosures if we're buying or whatever for free. You can do it at thegoldadvisor.com. You can sign up for a Gold Advisor or Silver Advisor. So either one. And then the more aggressive things are in the paid newsletter, paid prospector. So, Jesse, we've been growing like crazy as many companies have because of this bull market. I've had to hire additional people. We've had different products and services. So we're rocking and rolling right now. And we're doing well, we're having fun, but I think there's a lot more fun still ahead.
Great. Well, I'm going to put a link to the goldadvisor.com where everything you mentioned is available. Chen, tell us about chenpicks.com and what it is you do there.
Okay, I'm a little bit different than Jeff, and first I run my family asset, and I had growing and growing in the past decade. So that's my first business, and second, I write a newsletter on the side, tell people what I'm buying. I try to stay liquid so people can really follow and make some money. And I don't give out information for free. No, I only have to subscribe. And then it's pretty expensive. Most people actually fit. I have a lot of subscribers over past 10 years and they still following most. My best followers, subscribers are either hedge fund manager or very wealthy individual. So with some capital, because I run a pretty sizable portfolio in my family. So that's something. If you are those categories, that's something you would consider. And also, I'm not just limited in mining. Okay, I also had energy. I had energy before, but I already sold most of my energy portfolio. I also into other sectors like biotech and others whenever I see a fit. So I try to be diversified.
Great. Well, I'll put a link in the description below to chenpicks.com as well. Gentlemen, this has been a fantastic conversation. Thank you so much for coming on the show.
Thanks for having me, Jesse. Fun time still ahead.
Thank you, Jesse. It's a great time to talk. I mean, I'm quite excited about the market. November 25th. Let's see.
I'm going to hold you to that, Chen.